Hello, this is Eric Parnell from Great Valley Advisor Group. And how about these markets? Everybody was talking about 5,000 coming into the year, and we're already pushing towards 5,200. But this raises concerns. Isn't the market overdue for a correction? Aren't valuations too high? Yes, both of those things are true. But the one thing that's important to remember about markets at any given point in time is that it's all about liquidity. And the liquidity environment remains abundant to support higher stock prices. One has to look no further than Bitcoin, which has been surging to the upside. And we see the relationship that has existed between Bitcoin and the NASDAQ 100 going back over nearly a decade now. This indicates that there's an abundance of liquidity continuing to pour into the markets. Does that mean that we have the all clear? Not necessarily. One issue that you hear talked about a lot is the lack of breadth in the marketplace today. And this is indeed true. We heard a lot about the Magnificent Seven stocks in the last year. Now, the good news is that we're seeing more broadening in the market. More and more stocks are participating to the upside, but we are still fairly narrow in our breadth versus where we are historically. This is something that will be important to watch as we continue through the remainder of the year. But another element that's worth watching is the expectations around interest rates as we go through the rest of the year. We saw a backup in the 10-year Treasury yield, which has put some pressure on stock prices, but they managed to push through it so far. As long as the 10-year Treasury yield stays where it is now, or maybe falls back lower, that's supportive of higher stock prices. Another issue is if the 10-year Treasury yield goes higher, however, then we should expect stocks might come under pressure. Another issue is around whether the Federal Reserve is going to cut interest rates in 2024. Expectations were high that we were going to see a lot of interest rate cuts by the Fed as we came into the year, and those expectations have ratcheted back a lot. But the markets are signaling a near 100% probability that the Federal Reserve is going to cut interest rates at least once this year. Now, we shouldn't be surprised if we see a 5 to 10% pullback in stocks in the near term, because the market has done so well so far this year. It's overdue for a pullback. But that would still be in the context of a broader uptrend that we're seeing so far this year, and we can reasonably expect to continue as long as this liquidity environment remains so abundant. Thank you for joining me for this latest Market Insight, and I look forward to seeing you again soon.